Hello. In 2008, a global technology business began to offer its suppliers a new type of financial support. Reverse factoring or supply chain finance was then a relatively new idea. But in the 15 years since, the Siemens supply chain finance program has grown into one of the world's largest and most sophisticated. Today, I'm going to be joined by three people who were there at the very beginning as they relive the events of 15 years ago. We'll be taking questions from you, the audience, and drawing lessons from anyone considering a similar program today. Now, today's event is sponsored by Orbian, who have our thanks for supporting this session. But the most important thing for us is that all of you get the best out of today's session. So I'd really like you to introduce yourself. You can use the chat function at the bottom right of your screen. Tell us where you're from. Give us an idea of what the weather's like where you are. It's cloudy in London today. And perhaps take our poll. We'd really like to get a sense of where you are on your supply chain finance journey. You can vote, again, bottom right. Does your organization offer supply chain finance today? Three simple choices, yes, no, or you're considering it. So let us know where you stand on that. And finally, from me, you don't need to take detailed notes because a recording of the whole event will be available immediately afterwards, and you can share exactly this address, this URL, with anyone else in your organization that you think might find this content valuable. So Siemens, as I mentioned, 15 years ago, a lot of our panel were slightly younger back then, and you'll note, of course, there are no photographs of me because the contrast would be too startling, and I wasn't there. But it was a very early stage for supply chain finance globally. Many people hadn't heard of it. People were confused as to what exactly it might be and what the benefits could be. But the program has gone on to be an award winner in most of the major supply chain finance and working capital awards and made Siemens a household name for anyone discussing supply chain finance. And today I'm joined by Friedemann Kirchhof, head of supply chain finance at Siemens, Markus Schiffers, managing director at Orbian, and Doug Schoch, vice president of Siemens Financial Services. Gentlemen, hello.
Hi.
Hello.
Hi. So 15 years ago, we were all in different places and doing different things. First of all, perhaps you can all give me a flavor of what you were doing back then. I won't ask for an exact inventory of your day, starting with coffee in the morning, but just give us an idea of where you are. Markus, can I start with you? What were you doing 15 years ago?
Sure. So 15 years ago, I was heading up a small team in the United States in Siemens Financial Services that was purchasing receivables from Siemens companies and third parties.
Makes sense. And Doug, I believe you were in the US as well in those days?
Oh, yes, that's for sure. Still am. And it was an exciting time. There was a lot of good thinking about what we could do differently and maybe some different products to bring to bear. And this is one of them. So it was a really interesting and exciting time.
Makes sense. And Friedemann, what were you doing way back then?
I had nothing to do with working capital finance back then. I was working in the UK in accounting and controlling. And I was the late entry to the group. So I only joined 14 years ago. But that was an exciting journey since.
So you're the relative newcomer of the group, although 14 years is a pretty good record. Yeah. So we'll do one of those dissolve fades. It's now 2008. And most people in corporations, at least, haven't really heard of supply chain finance. Since then, it's become a huge thing. But just give us an idea of how this whole thing began within Siemens. Where did the idea come from? How did it get started? And I'll take anyone who can take that. Markus, Doug, before Friedemann.
Yeah, I can take a shot, and then Doug correct me, with everything that I'm not remembering correctly here. So anyhow, I think what we were doing back then was we were buying portfolios of receivables. And we were buying those portfolios from Siemens corporates, so Siemens companies. We were buying them from banks, and we were buying them from other corporates. And funny enough, once I was looking at a portfolio that was offered to us from a bank, and I didn't understand what I was looking at because I saw a portfolio of receivables with many sellers and one obligor. And typically, when we were buying those portfolios, it was the other way around. There was one seller and many obligors. So I reached out to that bank and was asking what I was looking at. So they then explained to me that those receivers were acquired through supply chain finance by the bank and sold on. This was my first contact to supply chain finance, when Doug had already a small team that was trying to establish very, very micro supply chain finance for smaller companies, right, Doug?
So let's move on to Doug. Yeah, talk us through the micro supply chain finance idea.
Well, we have to talk about a name other than supply chain finance that was being used inside of Siemens at the time, which was called trade payables financing. And we had a few PowerPoints, some concepts, and a few banks in New York who were interested, and we were, kind of talking about how we could do this. There was a group called Trade Card back in those days. It was in that space, and we got involved with them. And having been someone who for SFS was, quote, on the street looking for participation deals and receivables financing, and having contacts not only at some of these early fintechs, but at some of the established banks like Citi and JP Morgan, there were some willing ears that were interested in how this could move forward on a much larger scale. So we had a bit of experience, as Marcus said, in sort of a micro size. And then the idea is, how can we do a business concept / proof of concept inside Siemens to bring that value to all the different Siemens buyers or organizations that were, had so many different supplier relationships. So that was a concept, and we had to run with it. And it took a while, but we got there.
But to tell you the truth, nobody wanted to run with it other than Doug and I.
So you guys were the voices in the wilderness crying out that no one was hearing.
We were the crazy kids. Nobody wanted to deal with us. I guess they thought we were crazy. Nobody was waiting for us. Nobody was waiting for the solution, to be honest. But then I guess we got the pilot, the green light for a pilot from the treasury from Munich, to run a pilot in the US, very, very small, for Siemens perspective, 20 million. And for simplicity reason, we picked maybe the leading bank in supply chain finance. And we had a great client, we thought, Siemens client, to start with, from the automotive sector. And then, unfortunately, we lost our client the day before everything should have started. Because the day before everything should have started, the CFO of that client, VDO in the United States, called me and had to tell me that VDO was sold to a different corporate. So we lost our client before everything could start. Having said that, we learned already many, many things before it really started. Things that we didn't like and things that we liked. And then Doug was on the road to find us the next client, I guess.
So you have the infrastructure in place. You had everything ready to go live with that client. You just needed to find some more clients to run it with. Can I just wind back slightly? What was the first driving force behind wanting to do supplier finance? I mean, Siemens globally was not a bank. What was the motivation within Siemens for supply chain finance? Supporting suppliers? Was it what was the birth of the idea? How did that come about?
So mediocrity, I think, is the answer. And let me explain what that means. We did a little research and we got some intelligence from the market around cash conversion cycle for industrials, some of our competitors, and the general marketplace. And Siemens didn't rank very highly. Siemens was mediocre at best, and certainly in the days payable outstanding factor on cash conversion cycle, Siemens was in the poor category. So I guess when you do a self-evaluation and you see that you're not so good, it can be motivational. I think sometimes the trick is to actually get the message that's acceptable and have it heard at the right level, at the right ear. And I think there were some fits and starts with that, but we eventually got, I think, the right ear and motivation to have Siemens increase its efficiency, right, in cash conversion.
That makes absolute sense. So you were mentioning that you got a certain level of buy-in, but this sounds like something that started in the US and then kind of came to Europe. Was there a moment when you decided, okay, this is going to work? You just lost that first client. Did the next clients come easily? Was there opposition within the organization saying, hey, you guys, this is so great, your first client has now vanished? What was the reaction to the idea at the time?
I guess, so at least from my perspective, when the decision was taken that we should take this concept into Europe, I was first of all very personally affected because my plan was to stay in the US, actually. I was on a green card, but back then, long pre-COVID, the CEO of Financial Services did not consider that. So he said, okay, you need to decide you want to run this project from Munich, Germany, which is not bad, right? But you want to run this project from Germany, or you're off this project. I find somebody else to run it. So I decided to go to Europe, and I thought everybody's happy that we show up and try to do something in Europe, which is when the resistance really only started. So the US was very progressive in this matter of supply chain finance, but in Germany nobody was waiting on it because I guess this concept, at least the way we were offering and planning it, was totally alien to everybody that we talked to within Siemens back then.
So give me a flavor of those early conversations. You were on a plane from the US, you'd restructured your life and waved goodbye to your green card, and you're now having conversations with the senior team at Siemens. What sort of reaction are you getting? I mean, you said they were not perhaps as progressive as their colleagues in the US, but were you told that you were mad? Were you advised to rethink? What was the reaction?
The initial reaction, I guess, on the working level was rather that, oh, we don't have time for that. Another IT project. Procurement did not see the need to extend payment terms, so that message wasn't out there yet. But I will never forget on the top level, it was fun to a certain degree. I got the opportunity to present to the Siemens Global CFO and his management team. So, and when I was presenting this very early on, I think we had 2 or 3 suppliers live. And it took us 4 months or so to take them live. So we had the 2 or 3 suppliers live, and I was presenting to the most senior people of Siemens. And I was telling them that we have 3 suppliers, but that we will take it to 700 within 2 years. And they were laughing. They were looking at me, kid, you're dreaming, you're drunk, whatever. But they were laughing, friendly though, right? Very friendly. I think it was a nice distraction of their very serious day that I was showing up there telling them we take it from 3 to 700 in no time. Then they asked about the cost, what budget do you need for this? And when I told them that actually I only need a very small team because we are not planning on building platforms whatsoever, we will use established solutions for that. They gave me green lights. I think honestly, they gave me the green lights because they wanted to see me coming back in a year's time, telling him that we took it from 3 to 7 rather than to 700.
They were waiting for you to fail.
Yeah, maybe. I don't know. But they were friendly. The top management was very friendly, I have to say. So I got the green lights to build a team. And among the first to hire was Friedemann. Now we're in year 1 or 14 years before today.
So Friedemann, you were having a respectable career in straightforward finance. And suddenly your approach to get involved in this strange reverse factoring, supplier finance, SCF field. Was that your first exposure to it? Did you think these guys are mad, or did you think this is a great opportunity?
I didn't know what I should expect. So I have been approached by Markus, who was just in the stage to forming this little team for Europe, and he explained it. He sold it to me, and I thought, all right, this is a tempting opportunity, even though I had no clue on what it is about. But I was tempted by the idea, by the concept, and ready to move into another field. And it kept me since.
And a little bit later, I'm going to ask you, Friedemann, if you can, to give us an update on how big the program is now, because it's a sizable, substantial program, which you might not think, Markus and Doug, from those early beginnings, that it's become bigger even than you thought. So you've mentioned some of those early conversations, and you talked about building a team. You didn't need a large team, but how many of you were there in those early days running the SCF program?
I think we're 3 in Germany, if I remember correctly.
Yeah.
And
there was
2 in the US.
Two and an intern and a summer intern in the United States.
I'd love to know the.
The funny thing is, I just sneaked through the participants. One of the early colleagues that was back then in the US team is participating today as well. So that's really nice getting together on stage and off stage.
Give them a name check. Who are they?
No, I mean, I just that is the beauty of that tool, that you basically can sneak peek behind the curtain. And I saw Nick Klinsmann's name in the participants, so as if you would see the audience. And this was back then the exchange in between the team in the US that was more experienced and the team in Europe that just took up the pace, that just basically learned to know, okay, what have the colleagues already done, what has been working, what has not been working. So it was a very, very good cooperation from the start. The US colleagues and the new team set up in Munich.
Makes sense. And if you are out there and you were on the team, feel free to use chat to let us know your memories. And if they differ from our panels, we might look at it or we might ignore you, because the memories on this platform are certainly correct.
Are we talking about Nick Onsman by any chance? I didn't. Oh yeah.
Nick, you're typing now. Hello, Nick.
Nick,
I think we'll wait just for a second, and I know he stopped typing now. Oh boy, where to start? Nick, if you're not careful, we'll actually get you on stage later on. But no, you're safe. Don't worry. Okay, so we've got to the point now. Markus, you've shared your crazy idea. You've recruited Friedemann, who's come in. Doug, you're in the US smiling and nodding as the Europeans do their stuff. The next stage, though, is to sort of roll out the program, from 3 to rather more than 3. So presumably you had to engage with procurement and begin to talk to the first suppliers and tell them how this worked and how it might benefit them, and get over perhaps any concerns they might have. How did that process work in terms of beginning to grow to onboard suppliers? Let's go with you, Markus.
I wanted to say let's go with Doug, because the US.
Doug, let's go with you, Doug. Yes.
18 months ahead of the European team, and I was focusing on getting the European thing going. Fair enough. Doug was in rollout, maybe.
Okay, Doug, rolling out initial conversation.
So it's still today about education. It truly is. And it became quite obvious to me within a year that if we did not have an extremely efficient way of educating, we were going to be self-limiting. So what we ended up doing is developing sort of a standardized education deck of material, but not a stuffy, here, just send this, we're done. It was, can we tell the story of the value to both the supply base, the internal procurement managers, the finance world, even the accounting world, right? The answer was yes, you can. And we just started to work with, hey, do we want to do this once a week? Do we want to do this session twice a week? Do we want to have it as an open invitation that anybody can invite, and we just have to be flexible around their schedule? So we did fits and starts with this, and we ended up settling on a schedule of Tuesday mornings and Thursday afternoons, having an hour session available for anyone within Siemens who needed to understand what supply chain finance was, how it worked. And if you happen to be a supplier, a direct first tier supplier, here's how you go about enrolling. And we would just educate, and be available for backup phone calls, emails, and any other way that a supplier or a supply chain manager wanted to use our expertise to try to explain what this new thing was that they really didn't quite understand. And so that's how we really started to get more of an effective and efficient enrollment process in place. And I think that ended up working very well in the US, and it was pretty much a lift and drop into Europe.
So still, I think one of the keys was simplicity as well. I think what we learned is when we talk to the suppliers, get rid of the complexity. There are many things that are very important and interesting, but not everything is crucial to understand this rather simple concept. So we got rid of the complexity, and then I will not forget that there was the procurement team in the US backing us, although they did not like our plans. So there was a very straight, very senior procurement guy that called me once. I was sitting in Munich enjoying life, and he called me up, and he was not happy because we gave them some boundary conditions, size of suppliers. If a supplier has a certain size, the supplier can join. And that person, I forgot the name, Doug, you may still remember, called me.
Carl Oberlin, yeah.
Carl Oberlin called and said, he had a very simple message for me now, okay? And the message was, you take all my suppliers or you don't get one supplier. So that was the message. So we had to adjust a little bit our planning to allow smaller suppliers to join the program, which we then did. And I think this is when it really got rolling.
Because that's a key part of the program. Some people talk about the long tail of, some programs are very happy to onboard the very largest suppliers, but getting those smaller ones can be a chore. It's a lot of work. Did your process allow you to onboard those smaller suppliers relatively easily, or was it a difficult thing to set up?
I mean, you heard Douglas saying how efficient the education sessions have been working, and if you have an open house session once or twice a week, it doesn't matter that much on whether there is one participant, which we sometimes have, or whether there are 10 participants. So it is really an effective tool and an effective solution to really scale up and to onboard quite a few suppliers, which actually the colleagues in the US from the start did. So we have currently, I think, onboarded more than 5,000 suppliers with this established way of communicating the benefits of the program.
And that's hugely impressive. And in a moment, Friedemann, I'm going to ask you, if you will, just to share a little bit of information about the scale of the program today. And then after that, I'd like to come to our panel and perhaps look at some of the lessons that you learned and maybe how we might share those with us. Before we go there, let's take a quick look at our audience. I'm delighted to say that 71% of our audience do have a supply chain finance program in place, and around 25% are actively considering it. Just 4% don't have one. You may want to change your ideas at the end of this session. We don't know. I can also see questions coming in. Yes, one from Nick and from Adnan, and we are going to get to your questions, guys, as soon as we've got into some of the detail of the program and we've heard a little bit more about the lessons that we might learn. We'll get into some questions from the audience. So if you have a question that you haven't asked yet, do type it into the questions panel, and I will read them out a bit like a cut-priced radio host. And if you want to upvote them, that's simple as well. Just press the up button to say it's a question that you would like answered. So Friedemann, we've heard that the program began relatively small, one supplier and then no suppliers all of a sudden, and then 3 suppliers and then 5,000, you're saying now. And I know that the program today is enormous. And I wonder if you could just talk us through briefly where we've got to from that small beginning. What's the program like today?
I mean, what you see here is something which is probably to the 71 or 75% that already have a program. They all know about that. So how the structure is working of a classical reverse factoring program as we are running with Obion, and what benefits are in there for, on the one hand, suppliers, on the other hand, for Siemens. What I would flick to the slide, basically to the one where you see how the volumes have been developing. And we started them, and you barely see the years. It starts with 2012, ends with 2022. And we left out in those overviews the first 4 years because the numbers that you would see would be too tiny to still give a meaningful picture. But after those 4 or 5 years, we actually were at the edge of onboarding 1,000 suppliers, and we're having transacted volume of more than 1 billion, and this is euros, by the way. the pattern of losing clients. So basically, Markus elaborated that we lost the first client. In a huge conglomerate as Siemens is one, the pattern of losing clients was unfortunately one that we experienced more often, because our experience was that businesses that embraced active working capital management were usually the ones that had been challenged by the top management, that were at the edge, where the question was asked, all right, do you belong still to the core, or are you basically in a branch, in an industry that doesn't necessarily fit to our core strategy? And so we saw basically the other pilot that we run with left us then a couple of years later. The pilot that we started with in Europe, which was our IT service provider, our internal, also was then leaving the company a couple of years later. And this is some pattern that we saw throughout the journey. So you see a couple of colors ramping up and then disappearing in the charts. And this is from businesses that we have basically intensively worked with. But then at some stage, those businesses left the Siemens team. And we are glad if we could manage to maintain the programs, which in some cases was the case. In other cases, this was just leaving the Siemens family was usually then the end of running a program for this particular business. And that's why we sometimes had phases where volumes were even going down. That usually was the case when we lost the businesses. But the effort that we put in and the suppliers that we onboarded is a stable growth path and continued to be until today.
Tremendous! What a great story, Friedemann. Thanks very much for that. So we really have got a truly global program, 5,000 plus suppliers, and I'm interested to know the benefits to Siemens. Doug, I've heard you speak in the past about supply chain finance as a competitive advantage in terms of bonding suppliers to Siemens and making them likely to give Siemens preference if there's a shortage, for example. Is that true?
I believe it is true. And it's not just because Doug Schoch thinks that. It's because, procurement managers live and breathe ongoing contracts, and they live and breathe payment terms and obligations to be on time with orders, and there's an awful lot of metrics that are tracked to make sure that our supply partners are enabling Siemens to keep their promises to our customers. And so what we see and have seen over the years is that some suppliers, and I'd say some that are important to Siemens being able to fulfill its obligations, will provide good and on-time service at high quality. One of the factors that they look at is my working capital and cash flow for a Siemens order versus a different order. And let's face it, it's been drilled into me, at least, and I think to each one of us in this working capital world, that there's no supplier that has unlimited resources. Each and every order has got to compete for a limited amount of time, skill set, right? Raw material, processed material. So if you can get a better and more reliable cash flow out of fulfilling this order as a priority, that's what will happen.
So really interesting. You've got the dual benefit of clearly the optimizing the cash to cash cycle is core for Siemens, but also that benefit of supplier loyalty and security of supply, particularly in difficult times. So what I'd like to do is just move forward a little bit and update the scenario. Markus, I think we have to be open about the fact that you did leave Siemens in the end. You're now with Orbion, which of course is a major partner for Siemens. What have you seen with Orbion, which of course has a wide client base? Is your experience, is this Siemens story kind of replicated elsewhere? Has supply chain finance become normal these days across industry, or is it still a niche activity?
I no longer think it's a niche. So it has become normal. And we will get a little bit more transparency very soon because certain disclosure rules are changing. So in the near future, we will see many more corporates are disclosing that they're using supply chain finance for long, but they were not very transparent about it, which Siemens was always playing totally differently. So from the beginning, we were very transparent about what we were doing. On the Siemens webpage, you could see everything. You could see the pricing that we were requesting from suppliers, etc. So from that standpoint, I think Siemens was clearly and still is the market leader when it comes to running a supply chain finance program at such a scale. For us at Orbien, after almost 15 years, I left Siemens. I had 3 years somewhere else before I then joined Orbien. For us, the Siemens program is the template for a successful program. And obviously, we would love to repeat that with every of our clients. Not all of our clients are that big, though, and are not that complex. But it gives me the confidence that we can deliver a solution to a regular corporate because we could do it for Siemens. And if Friedemann would run you through some numbers of connected entities, what have you, it is massive. So I think to me, it gives us and my team actually the confidence that we can deliver something of value. And that is the most important, I guess, when it comes to selling a solution in the market.
And Friedemann, from your perspective, is this program going to continue to grow, or is there a plateau where you've pretty much onboarded every supplier that's going to be onboarded?
We see a level of saturation, so that we have been talking to the largest suppliers that we have onboarded already quite a significant amount, and that the increase of procurement volume has already reached some level. We currently internally discuss to basically give it a bit of a ceiling and to let things settle, so to stop the growth pattern that you have seen and just now take a breath, see what is going to happen now with, Markus mentioned, the increased level of financial disclosure. Is this having an effect? Are rating agencies talking to us about that, or is that something that is rather unimportant in the conversations? And based on what feedback we receive, we will then decide: are we continuing the growth path, or are we leaving it as it stands? Obviously, the program is a living tool to support the supply chain, and we saw the appreciation by the suppliers, in particular in the last couple of years, which were uncertain to a certain extent. I recall, and it is also what you see in the figures, when we had the start of the pandemic, banks were reconsidering their credit exposures, and we saw that with us, but we saw that also with suppliers, and that basically changed also some supplier behavior, that they said, all right, it would not harm if we have this alternative option also available. So suppliers that back in the early days told us, no, there is no need for using such a program, changed minds over time, and in particular since 2020. And therefore, we could see that as a valuable tool for managing the relationship to the suppliers, and we will maintain this valuable tool.
Thank you very much for that. So in a few minutes, gentlemen, I want to come back to you and ask you the traditional difficult moderator's question, which is, if you had one piece of advice for those people in our audience today who are at the beginning of their supply chain finance journey, and we know from our poll there are plenty of those, what is the one piece of advice you'd like to give them? But while you're thinking about that, if I can ask you to double track, we have some audience questions, and we'll try and get to these. And the first one is from Nick Ansam, who says, over 15 years, what's been for you the most significant change in supply chain finance? He mentions dynamic discounting being the popular feature today. Doug, I'll come to you first. There have been a lot of innovation. Anything that strikes you as being particularly interesting in terms of innovation or change in supply chain finance?
Well, supply chain finance can be thought of as a pretty big umbrella, right? I mean, because reverse factoring is a methodology of achieving supply chain finance. Dynamic discounting, another way of achieving a way of financing that otherwise, just isn't standard. And I think that when we talk about now and in the future, taking that value and being able to move it down into multiple tiers of a value chain easily, simply, and without a whole lot more complexity, there's going to be, I believe, a movement towards that. I see it now. I know that there are some players who are really starting to dig into that space. And I believe that there's a lot of benefit there, particularly for an organization like Siemens. The massive amount of second and third tier suppliers that carry pockets of known and unknown risk is extremely important, right? So we can understand where those risk pockets lie and make sure that there's a good positive flow, cash flow, right, in those relationships. As that anchor customer driving the purchase orders, we're going to benefit, right, from that, even from our perspective, passive type of risk management. And I see that as an area for real expansion of supply chain finance.
To be clear, you're talking about getting finance to the suppliers, tier 2, tier 3, and right down the chain. That makes absolute sense. Markus, is that something you're seeing as well, or any other innovations that you're interested in at the moment?
I think from our perspective, what has been more relevant is that we develop a structure that works without factoring. So that is not that technically is not a reverse factoring program, but that we can pay suppliers early through other means. Because especially in markets like Europe, where the regulatory environment is very, very difficult, because many countries have specific regulation around factoring business. For us as a non-bank provider, that is probably the most important change. On the contrary, dynamic discounting, that is very popular I would say in the media. I think it is overrated and the volumes are lacking behind the plans for many years now. So I don't see dynamic discounting as extremely important. I think it is more important to find ways to pay suppliers in countries where you otherwise cannot.
Makes sense. And Friedemann, would you agree with those 2 points?
I would agree with those 2 points, and you cannot today have a panel where you do not drop the question for ESG-linked supply chain finance. So that is obviously, and there are quite a few topics on the agenda that we are looking at, and that makes our job interesting every day, because things are developing, and we are looking also in linking our supply chain finance program with certain ESG criteria. But as always, the devil is in the detail, and the devil is in the definition of the parameters. So Markus can confirm we have been discussing this up and down and back and forward. And with supply chain finance, where so many different parties are to be connected. And this is, I think, the essence also of those structures, that you get a good level of communication between procurement, finance, suppliers, and so on. There is the challenge to get this consensus of how do we apply, and what measures do we take? What is the priority? But of course, things like ESG linked program, that's also on the agenda.
Tremendous. Nick, I hope that answers your question. Of course, we will be returning. You can see the blatant advertising behind all our speakers. Don't worry, we made them do this. It's not their choice. We will be covering ESG, IFRS, and everything else in Amsterdam on the 28th of November. Adnan, your question was about the impact of IFRS changes. I'm going to, Dana, I can see, has given you a link to the next session in this series. Our next webinar is on precisely that topic. So you get 45 minutes just on that. And I recommend that you attend that one. If we try and get into that now, we'll still be here in 2 hours' time. But a couple of quick fire questions so we can try and get as many in as possible. And guys, just shout out if you want to answer it, or look stern and look disgusted if you really don't like the question, and I won't press it. So Kern van Varenberg says, how do you deal with suppliers who already have an invoice discounting or factoring solution? Do you very often come across this fact they're already financing their own receivables?
Yeah, that's absolutely fine. I mean, there is no. Our program is a purely optional offer to our suppliers that we usually offer indigo when our procurement colleagues negotiate, and usually negotiate payment terms, because that is where it can be most efficient and can be the biggest contribution. But if our suppliers are fine with their financing structures, and if our suppliers agree to what our procurement colleagues ask them to, then we do not ever force or someone into to make use of our program. That's not what it is being designed for.
Good. I hope that that helps. And two more quick ones. Thank you. Yes, indeed it does. Little thumbs up. Mikko Malmanen asks about the increased interest rates. They are higher than they've been for many years. He says at the moment the comment that they're seeing from some suppliers is that joining a program might be too expensive. Are you seeing any change in the attitude to SCF in this different interest rate environment? Friedemann, I guess this is one for you.
Slightly. We have a variety of different businesses that are in the Siemens programs. And some of the businesses in project business tend to have long payment terms. We really have anything in between 30 days to 360 days of payment terms that are covered and financed by the program. And what we experience, of course, is that on the long end, if suppliers have longer payment terms, the increasing interest rates obviously make things more expensive, and we are discussing that, and we are balancing, is it worth the while to accept the price increase from the project cash flows, from the project EBIT position? So this is a regular discussion and a regular evaluation. Where is the right balance? And then we sometimes recommend, all right, maybe give a bit, don't have that long payment term, or maybe in your situation with the project cash flow, with the project that's up running for another year or so, just bite it and accept an agreement on the raised interest rates. But I think in general the key benefit of leveraging the financial strengths of Siemens towards its suppliers, that is still existing, because the high interest levels are affecting us everywhere, and therefore the interest arbitrage of the program is still valid and still effective for a good proportion of suppliers.
Thank you. I hope that thank you, Mikko.
Mike, is it okay if I just add to that real quick? Just, in our experience, yes, the general environment of interest rate, of course, is increasing, but that doesn't mean that it's instantaneous to each and every supplier who's considering, right, coming into the program. Meaning that, conditions of borrowing can run a course of time. And as the rapid pace of the increases recently may not have caught up with each and every one of the suppliers who are considering entering the program. But time marches on and stands still for no one. And eventually, the effects of that will hit that supplier, and a no or not quite sure today may very well turn into a yes, it's a much more attractive, 3 months down the line or 6 months down the line. And we've already seen that happen. So yeah, again, the arbitrage is always part of the consideration. But what's the true effect of this rising interest rate environment at the individual supplier? That can have a time lag.
Okay, makes absolute sense, and I think that has, Mikko has said it has answered his question. I'm sorry, Christina and Kirsty, we're not going to have time to get to your questions, because I do want to give our panel a chance to share their nuggets of information. But Orbian and/or Siemens will try and get back to you offline with answers to those questions directly. So, gentlemen, I did threaten you with this. You now have 15 years. Okay, Friedemann, I know it's 14 in your case, but who's counting? You've got 15 years experience in running a really successful global supply chain finance program. If you were starting now, or to put it another way, if I were a person starting a program and I'd come to you for advice, what's the piece of advice that you might give me if you could only give one? And I'll go clockwise from the top. So Markus, if I came to you and said, please, Markus, what's the one thing you would tell me to do or not do if I'm starting an SCF program?
Okay, so from my experience, the most important from the corporate perspective is build an internal resource to run such program, kind of manage it from inside the organization, especially when you have a certain size. So if you're an enterprise like Siemens, or even half a Siemens or a quarter of Siemens, nobody from outside can understand your organization and steer your organization and know when there's a procurement meeting. So if you do not have the resource, and it doesn't have to be a big team, it could be half a person depending on the size of your organization. But if you do not have that resource, don't do supply chain finance.
Tremendous. Thank you. Doug, your nugget of wisdom for our global audience.
Well, I've already indicated the education, and I will say it again, educate, educate, educate. But be available and stay curious, right? And that means to be curious about interacting inside the organization, right? Aligning, right, with the interests, know what those interests really are and can be. And when you've got that, then, smile and let's talk to suppliers, because there is value, and let's get that message out there. And we don't need it to be complex, right? But the education is key for sure. And staying curious is part of what you need to do.
Thank you very much. And Friedemann, final word goes to you. Your one tip for the startup SCF person. What should they be looking out for?
I mean, adding to Markus and to Doug, you have to be prepared that this is not a quick exercise to put in place. So it takes some time. So it's not a sprint; it is a marathon. You have seen it in the figures. The first 4 years we didn't even show, and it takes some time and some dedication. But if you contribute that, you can keep that running.
Tremendous. Thank you all for that great input. That time has gone hugely faster than I expected. We're maybe a minute or two over where we aim to be, but I can see that our audience has appreciated. So, gentlemen, thank you so much for sharing your time and your wisdom with us. If you enjoyed this session, as I mentioned, do join us on the 13th. We'll be looking at the IASB rules for IFRS. And if you're interested in the FASB rules for US GAAP, previous webinar is still available online if you go to the Working Capital Forum website. And a date for your diary, for those of us who are willing to travel, Amsterdam, 28th of November is where we're all gathering. I very much hope our panelists will join us there, if we can persuade Doug to get on an aeroplane again. But in any event, there'll be about 300 working capital practitioners. If you want to learn more, join us in Amsterdam. workingcapitalforumeurope.com is the address. The recording of this session will be available about 4 minutes after we finish, so feel free to come back and review the bits you've missed. And in the meantime, thank you once again to Orbion, who have supported this webinar, and thank you to our panelists, Markus, Friedemann, and Doug. Thank you very much, guys, and goodbye.
Thank you. Bye-bye.
Thank you. Bye-bye.
Bye, everyone.
Bye.